Well, again, I want to thank everyone for attending this morning, and I think this is probably the first group webinar we've had in, gosh, I would say probably in the last 5 years. So it's been some time since we put it out there. I realize there's a lot of folks that are with Messer that had no idea that doing group benefits was even an option. So this is a good opportunity for us to kind of let you know what your roles are, kind of some of the tools, where they located, kind of meet the team here, if you will. Uh, and so with that, we'll go ahead and flip to our agenda so that we can kind of stay on track today. We're going to be talking about advantages of writing group insurance, both for you and for the employer. We're going to talk about lines of coverage, plan types, and funding options, quoting requirements. And we're going to talk a little bit about online tools, and we're going to take you there and show you where those tools are located. We'll talk some about subcontracting. We'll also talk about service, and Courtney Marlowe, who is she heads up our service team. She'll have the opportunity to kind of talk about some of the keys that keep a client or keep a group client with us. We have a 97% retention rate, and the reason being has really nothing to do with me, to be quite honest with you, but it has everything to do with the back services that we provide. And so we'll cover that extensively. I'll also tee up Rob White, who is no relation to me, Dennis White, but Rob is part of our team here, and he's an expert with level funding, and he's gonna let you know a little bit about that and what those options are. That's kind of a golden egg right now. And at the end, you'll just kind of meet the Messer team. So we'll go ahead and flip over to what are the advantages of group sales. The advantages are you can start at any time. For instance, a lot of you are individual producers and you know that you're controlled by the annual enrollment period. There are no restrictions with group. We can start a group plan on the first of any month. You know, we could come to the table today, and even though it's getting close, we could start with a June 1, July 1, August 1, you know, right on down the line. It's also good to know that you can terminate a group plan with a 30-day notice. Now, a lot of employers are unaware of that. They think that they're locked in. And actually what they're locked into is they're locked in with guaranteed rates from the carrier, but they're not locked in as far as having to stay with that group plan. So they can terminate with a 30-day notice. Just write a letter to the carrier, hey, we're going to drop this. And then what does that do? Well, for you individual producers out there, that creates an SEP, or a special enrollment period. That gives you an opportunity to go out and write individual policies. Now, I'm not advocating that you go out and you start terminating group plans. But I'm just letting you know that, you know, we can start them anytime, we can remove them at any time. The advantage for the employer too is that he can write off the employer contribution, unlike with the individual. So if he has individual policies in place, he's actually giving money, and he has to be careful with the way he does it, but he's putting funds out there so that his employees can go and buy individual plans, but in no way can he designate that and say that I'm only going to give you these funds if you're going to buy an individual plan. And he can't write those off in any way. You can't pre-tax it. So there's really not a huge benefit to doing that anymore, because the laws have changed so much with the Affordable Care Act. I've been in human resource before. I spent about 25 years with a large retailer here in the Carolinas that moved out of the Carolinas about 10 years ago. And during that time, I can tell you that a benefit package is important. Employees will leave you for a benefit package more so than what you're paying them on the hour. So I also think that an advantage of group sales would be to retain good employees by having a good package in place, and also to attract new hires as well. Now, the advantages of an agent are there are no production requirements for you. You're under our umbrella, and we'll talk more about that as we move along, but you don't have production requirements. With group sales, you're fully vested from day one. So, you know, I've got agents with Messer that have put groups in back in 2005, and they haven't produced since then, but they're still getting paid for the groups that they placed with us then. It's good to know that commissions on the group side are level, unlike the individual world. If you write a lot of individual, you'll know that you get the bulk of your money in the first year. You get a trail from there on. So it's not really that attractive as it used to be. But under group commissions, they're level. So if you're drawing X dollars this year off of your group client, you're going to draw them next year as well. And if we move them to another carrier, you're going to draw the same thing as well. So we'll talk more about that. The big thing, though, is that there's no servicing. The servicing is all handled on the Messer side. So, from a servicing standpoint, that's something that you agents can't get paid on. If you're out there and you're chasing human resource directors and they need this and they need that, or employees have lost ID cards or whatever the issues are, if you're out there servicing, you're not making money. Well, we take those servicing issues and we take them seriously and we handle them very well on this side. So again, that's just another advantage for an individual agent to write group health insurance. Let's talk some about lines of coverage. Obviously, we lead off with medical, but we also have life products, dental, vision, disability. We have a number of voluntary carriers as well. It's not a one-size-fits-all, but we'll customize packages that work for that employer. So underneath the voluntary, you've got products like accident, cancer, gap plans, just a long list of lines for voluntary. Always remember this, the medical rates are what the medical rates are going to be. But under the ancillary side, there's two sets of rates. If the employer decides to contribute, you can get a little relief in those premiums. If the employer just leaves it out there as voluntary, employees can pick or they don't have to, those rates are just a little bit higher in premium. So again, when we have clients and we go to the table for you, we'll cover these with them, and you'll get more and more familiar with these. We're going to talk about plan types. Fully insured. You'll hear me say traditional coverage a lot of times if we're on the phone together or if we're in the field. Traditional to me is fully insured, and it's where a carrier collects premiums. They pay health claims. The employer is responsible for co-pays. The employee is responsible for co-pays, deductible, and co-insurance. So fully insured plans, got an in and out of network, just something that you all are very familiar with if you've sold to any individual at all. We are partners with one of the largest national known PEOs, which is a professional employer organization. The commissions are superior in the contract that we have. So if we had to go out and lead off with a PEO, and a PEO, for those of you that don't know what they do, is they provide services to employers so they can outsource employee management tasks. Basically, a PEO wants to come in and they want to take not only the health insurance, but they want to take the HR functions, they want to take the payroll, they want to take the workers' comp, liability, auto, you name it, they want it all. Which is good, really, because it closes the door for anybody else coming in behind you. But they're kind of a full service, if you will, and there are times that a PEO just works. It's not all the time, but just know that if we run into that scenario, we've got a tool for that, and you can be paid for that as well. Level funded. Level funded has two components. It's got a fixed cost and a variable cost. And without me going any more deeper into that, Rob is going to join us in just a few minutes, and he's going to talk more in depth on how level funded can work for you. Level funded normally works well for healthy groups, and at times can bring in premiums that are some 40% less than traditional plans. So it's really, really something that employers need to take a look at. It's not something that a lot of brokers go out and lead off with, and there's not a lot of them that are really good at it. But Rob brings a wealth of experience with this, and almost a decade of experience with level funded plans, and we can get that in your corner for you. Ancillary coverage. Ancillary basically covers all of your voluntary products. And what does ancillary do? It helps to round out the health insurance component, whether it's a gap filler, whether it's a cancer accident, a number of those. And we've got just gobs and gobs of carriers that can do this. And like I said a few minutes ago, it's not a one size fits all, but just know that we can customize packages for your client. Plan types as well. POS, you'll hear that from time to time, and POS is a point of service. It's somewhat a managed care. There are restrictions with that, sometimes pre-authorization, sometimes you can or cannot go to certain hospitals or doctors. A lot of you that have ever written Coventry are very familiar with the POS and how restricted they can be, but they're also lower in premium from time to time. So it's a viable option most of the time in the market, also on the group side. PPO is a preferred provider organization, least restrictions. If you've written any individual at all, you'll know that it's got in and out of network, very similar to the POS, but just no restrictions. In and out of networks, got all your co-pays and bells and whistles. And then from time to time, you'll hear HMO, which is Health Maintenance Organization. It's very much managed care. They pretty much outline where you can and cannot go. And in most cases, those premiums are less expensive as well because they've placed those restrictions on you. I think what I'll do now is I'll have Rob go ahead and join us and talk a little bit about level funded and kind of cover this next slide with us and let you know how that could be an option for you.
Thanks, Dennis. I wanted to take a moment to do a simple comparison between traditional self-funded insurance, or what I like to call fixed premium health plans, and level funded plans for both small and large group. We will start with fixed premium plans. Fixed premium plans are insured by placing the group into an insurance pool to spread the risk out across a larger demographic. Insurance companies take premium dollars and split them into three buckets: premium reserves, claim reserves, and administrative costs. Depending on how the risk of the pool runs determines the renewal increase at the end of the contract term. There are other contributing factors. This explains why some healthy groups get larger premium increases. The company or client has zero control over the risk factors in determining costs. With self-funding, or as I like to call level funding, your company does have control over its own outcome in determining risk. With level funding health plans, your client makes the same premium payments monthly, and the insurance company puts premium dollars into the same three buckets, with one major exception. The money going into the claims bucket belongs to the client. If the company has a low claim year or a healthy year, the remaining funds are returned to the business owner. The claims bucket can be a significant amount of money, on average 40 to 45% of total premium. The graph illustrates the two side by side. The graph illustrates on the left fully insured, where 100% of premium dollars is retained by the insurance company. The self-funded plan on the right illustrates the breakdown of premium dollars into three buckets, with a large portion going into the claims bucket, represented by yellow on the graph. Not all companies are candidates for level funding. Groups have to be relatively healthy in order to receive a return. Companies can really take control over their health expenditures by coupling level funded plans with a strong wellness strategy. This concludes my segment on level funding. I would encourage anyone interested in learning more to call or email me, as I would like to expand upon this conversation. Thank you.
Thanks, Rob. I've been in the field with Rob before, and I have to admit, I probably spent a large portion of my time with Messer here, which has been 14 years now. I spent a large portion not selling the level funded plans, but yet selling against them. And not going to lie, once I was better educated on this, found out there's been several times that I've missed the boat on this. So I think just moving forward and knowing that that's a viable option right there is important for handpicking those clients where we know it'll work. So we're going to talk a little bit about HRAs and HSAs. I know most of you that have written individual insurance before, you know what an HSA is. It's a health savings account. You know that both the employer and the employee can contribute to this. It allows you to pay for medical expenses without paying taxes on that money. At the end of the contract, unused money belongs to the employee. HSA is a good plan to run. You see it actually. I've seen it both ways. I've seen it where employees did not fund it. The portion that needs to be funded, they didn't fund. They just had the high deductible plan, and it didn't work. It was a complete failure for that. So if you go into an HSA and you fund it, it's a good plan. It'll work for you. Under an HRA, it's a health reimbursement. Works a little bit different. Actually, it works a lot different. The employer sets aside pre-tax dollars for employees' reimbursement. It is employer funded. It is IRS approved. There are certain tax advantages for the employer. At the end of the contract, the unused money belongs to the employer. You'll see us tee up an HRA with a lot of traditional plans quite often. You can, not to get too complex with it, but you could take a deductible. It's, maybe an employer has a deductible of, I don't know, 1,500, and you could take it to 2,500, but make that portion invisible for the employees. And if they're healthy that year, then the reimbursement comes back towards the employer. And it's just a good plan. It's a good strategy to use. Here shortly, we're going to be going to our group website. And of course, obviously it's here now, but we're going to talk about and show you quoting requirements, where our contract is located, how the census works, and actually Courtney's going to kind of weave us through this because she's very specific in how information is brought in-house so that we can more efficiently get your quotes back to you and do it correct the first time. We're going to talk about product information. Know that when we're quoting groups, I always get this question, hey Dennis, how small a group can you quote? Well, to be truthful with you, I'd like for you to stay away from groups that are less than 5 because the commission dollars go down so far, but yet we're working just as hard on those groups. But from time to time, I understand you're going to run into that client. Maybe you're currently doing business with that client. Maybe you're writing life insurance with them or Medicare for them or their family. And it's just one of those have-to situations. We'll work with you. Groups 2 to 50 generally are considered small group. A lot of those are age banded. There are variations in there, which we could talk about once you start submitting cases in. We'll get more specific with that. But age banded rates, not much you can do with that. If you're this old, it's going to be this much. 51 plus, full underwriting. Groups can be turned down by the carrier. However, we can bring a lot of technology to the 51 plus side. And we won't get too deep into it right now, but just to let you know, we could do web-based enrollments. We could do HR management resources for them. So there's just a lot of things that we can do for 51 plus. I would always ask you, if you've got that group that's 51 plus, just consult with us first. Before you start gathering any information at all, consult with us first. Reach out to myself, to Courtney, or to Rob, and let us lead you through this. That way you're not going back and forth with the employer trying to gather information and then ultimately just being a thorn in their side. Always remember this. I can kind of slim this sheet down, is I'm always going to need 3 things from you when we go to submit a group. I'm going to need the Excel census in Messer format, which Courtney will cover here shortly. I'm going to need their plan design. And just so that everyone knows what a plan design is, it's basically about the 3rd or 4th page into their booklet, their plan design, that shows what's the deductible, what's the copays, what's the emergency room copays, what's the, what's my co-insurance. So it's just so that when we are building plans on this side, Courtney can literally go in here and pull hundreds and hundreds of plans. But if we're going to quote apples to apples, it just helps for us to have their current plan design, providing they have coverage in place, have their plan design so that we can build something that's very similar to where they're at now. We also want a copy of their current invoice. We use that as a gauge. If I don't have their invoice, if the employer doesn't want to submit an invoice back to us, there's a good chance we're probably not going to quote the group because I have no idea of knowing where they're at, what's competitive. We're back here and we're working feverishly trying to spreadsheet options for them. And then Lord behold, they produce an invoice at the last minute and we found out that none of the plans that we've quoted are competitive. We would rather know that up front and just be honest with the client and say, listen, you're right where you need to be. So again, just to kind of go over this, is we're going to need our census in Messer format, we're going to need a plan design, and we're going to need a copy of their current invoice. Now, also listed renewal on there because renewals come out 45 days out. Carriers have to get those to the clients 45 days out. However, most agents, brokers have a tendency to sit on those up until about the last 30 days or even less, which kind of puts the client into a bind. So that's where you can bring value from the get-go. If you ever get in front of a client and you say, Mr. Employer, when do you renew? And they say, hey, we renew June 1, but we don't have our renewal yet. You can let them know right away that they can go straight to the carrier and have that renewal sent to them because all their broker or agent is doing is just sitting on that and just limiting their options. So we'll talk more about that when we have cases with you. Lastly, the groups 51 and above, always just we want you to come back to us on that because there's a number of things that are needed on that, including risk analysis questionnaires and just a number of things. Timing is going to be so important. New groups, 60 days before the effective date. And when I say new groups, that's a virgin group. That's a group that doesn't have any benefits in place at all. And that's a hard sell. It's a very hard sell because keep in mind, if they don't have anything in place right now, in essence, they're paying $0. So no matter what we bring them, they're going to have a cost. So they're not used to a cost, we're bringing them a cost. So it's a very hard sell, although we do it all the time. And then across from that is existing groups. When you have an existing group, some of the questions that you want to ask this client are number one, when do you renew? That's the most important question. Find out when they renew because you always know that you want to be at least 60 days out, but preferably 90 days out so that we can quote this thing and get everything that we need. Ask them, are they happy with their carrier? Because it's important going into this knowing that, if they hate a particular carrier, we want to know it up front. If they love a particular carrier, we want to know that as well. Also ask them, are they happy with the service that they're receiving? Because ultimately what that'll tell you is that are they happy with their current agent or their current broker? So again, when is your renewal? Are you happy with the carrier you're with? And are you happy with the service that's being provided? It'll give us a really good heads up when we go in and know how to battle this thing for you and make them a client of ours, which is ultimately a client of yours. Subcontracting. We have all the available carriers in your state. End of story. We've got them all. But I will say this, we're also handcuffed to certain carriers. And we'll address these one-on-one. When you call in, if you've got a client available that wants to be quoted, we'll talk about this and we'll let you know that where we can subcontract you and where we cannot. There might be cases where I absolutely cannot send you out in the field with the quote from the carrier. I can give you everything but this one carrier. It might be two carriers, but we'll address that at the time. And if I can't subcontract you, that's where you have to tee me up as one of your strategic partners or your back office. Some agents don't care. Some agents are like, listen, Dennis, we're a partner in this. We'll all go out in this together. But then you've got other agents or agencies that they want their name front line. And I get that. And if that's you, if you want your name front line, we can always be your strategic partner and your back office. But ultimately, we're the one quoting this out and we're the one that's the agent of record on this. So if I can't subcontract you, I need to be communicating with the employer on your behalf and giving them the rates, giving them applications and everything we need to get them enrolled. So again, it's nothing to be addressed right now, but we will. I'm quite sure that we'll run into this if we go into the field together. And when we do, we'll address it at that time. There are some agencies as well that like to, hey, Dennis, how do I get set up on this to where I can just do the whole thing myself? I don't want to take advantage of your services there. I don't want to take advantage of anything else. Give us a call and let's talk about that individually because we could also set you up to where we could put you in the driver's seat. You could go out and get those contracts yourself and ultimately lean on us, but we could give you production thresholds to allow you just to go and do that on your own. Now, if you're making a good living off of what you're doing now, whether it be Medicare, individual life insurance, whatever that product is, if you're doing well, that's what we just want to be, is we just want to be someone who can create another source of income for you through group benefits. I would strongly advise you take advantage of that. Let us go out and do all the work. Let us, bump into the wall and stub our toes on these things because group benefits is a tough market and it's an ever-changing market, and the Affordable Care Act has made it more and more complex. I'm going to ask Courtney if she'll kind of step in a little bit here too, because I want to just say this: the most important thing, and I know I said it a few minutes ago, but the most important thing to keeping a client happy is the services that we provide. So I'd like for Courtney, if you would, Courtney, you with me?
I'm here.
I would like for you to just kind of talk about some of the upfront services that we provide when we gather census data in. What are we doing for that client? What are some of the things we can bring to the table for them?
So from the beginning of the quoting process through the sale of the group, we handle everything. We analyze their current benefits, compare it against what's available on the market now, and help them understand, what the best choice is for them, whether it's to stay with what they have or to, choose another plan, to add in products that help increase the value of what they're providing to their employees. Um, Basically everything from A to Z.
Okay, very good. And are there certain advantages that you would bring to the employees as well? Because I know, gosh, I've been doing group long enough. I know that not only the HR director or the owner is the one squawking back at me with I need. When we have a client in here, we've got employees that they have particular needs too. What can you do for them?
Well, we want to take the onus off of the HR manager. We want to be the point of contact to resolve everything that the employees need. A lot of, in a large company, a lot of times employees go to their HR manager. We want to be that resource. So they're coming to us instead. They're calling Messer and they're saying, I've lost my ID card. I need a new one. Well, we've already saved it and we have it ready to send over to you right away. I have a question about the network. I want to see this particular doctor. I've heard they're really good. Well, we'll look at the directory and find out if they're available. And if they're not, we'll help, provide an alternative. Or if there's a question after you've been to the doctor, you have a claims question, you don't understand the cost, we're going to explain that to you. If we don't understand, we're going to call the carrier and advocate for you. We're going to make sure that, there's always a favorable outcome to any question that you have.
Very good, very good. And I've also been on this side before, and I know how important it is when Courtney's on the phone with an employee who's going to have a certain procedure, maybe an MRI or a CT, and instead of the doctor sending them to Presby Hospital or wherever they're going to send them, and that ultimately coming out of pocket, their expense costing them $3,000. I've seen Courtney go ahead and send them to an imaging center that's local, and now their cost is less than $1,500. So she can bring so much value not only to the HR directors, who a lot of times are the owner, are the CFO. They wear the many hats in the small businesses, but she can also bring that value to the employees as well. Courtney, one last thing. Everything that's done has been kind of upfront and what we can do for them. When the group is closed down, is there any added value services that you can bring throughout the year for them?
Yeah. The Affordable Care Act is hard to understand. There's things that are constantly changing. We will also make sure that the business understands their responsibilities so that they remain compliant. We will add employees, new hires, we'll terminate employees, make sure that the bill is reconciled and that those charges come off. We'll also guide the businesses through COBRA requirements, state continuation, and all of that legalese, all that stuff that you just don't want to bother with. We answer those questions daily, so we know what the answers are, and we'll make sure that the businesses have the information so that they remain compliant.
Very good. I can't stress how important she is. When we have groups on the book for you as agents, you're going to find out that when we go out for enrollment meetings or when we speak to them, they're going to praise Courtney and the services that she provides more so than they are Dennis, who brought the plan for them, or you and Dennis going out there. So it's service is what it's all about when it comes to group service and relationship. And keep in mind, as agents, you're getting us to the dance. You have the relationship, we've got the service. I would like to.
You want me to go over this?
Yeah, I would like for Courtney to go over our census form.
Okay, so what you see on the screen in front of you is the Messer census that I've created. And I made this census based upon the requirements that all of the major carriers have for a quote. I've kind of consolidated it all into one form. If you fill this form out completely, I'll be able to run every possible quote very efficiently. Turnaround time will be short. At the top, you'll see the company information. It's important that you fill that out, the company name, the effective date, and then the information about the business. I want to make sure I'm quoting the right dental office. Sometimes businesses, there's 3 or 4 that have a similar name. The zip code is important. Rates are based upon demographics and can change based upon zip code. So I want to make sure that I'm quoting the right business. If you don't know the effective date, well, we need to know the effective date. So just, start with, what you think is a reasonable turnaround time based upon what Dennis advised you, probably 60 to 90 days. If you go down to the grid with the information about the employee, first name, last name, employee status, so on and so forth, we need all of that filled in. If you're not quoting life, you can omit salary and title. But if we are quoting life, we definitely need that. If we are quoting the dependents, the spouse and the children, you would put their information directly below the employee. You don't, of course, need to fill in the employee status, salary, and title, because those don't apply. I think that covers everything.
And I would add too, there's been so many times where we've had a census sent in and maybe the agent was in a rush, maybe the HR director didn't have a good explanation as to what we need, but they'll come in and everybody's all employee only. There might be 10, 20 on here that's all employee only. And Courtney quotes it, we go back out to the employer, we present, only to find out that now 7 of them have family. They want to add those in. We're coming back to the board, we're requoting again. It's very, very important to get the correct census the first time around. Rates change every time we make a census change. And it's double the work for Courtney as well. So we just want to make sure that the first time is the right time. Post-sale, I think we've covered most of this already. Courtney, unless you've got anything that you want to add to this?
Well, just, if we do everything right all year round, then we're really earning more business for you. And so just, if you have any questions, give me a call. We'll guide you through the process. But, ultimately, we want favorable outcomes and we want to grow the relationship.
Very good. No, I appreciate all that. And now, if we would, I didn't ask them to put that picture up there. I promise I didn't. I tried to get Rob and Courtney's picture, and they wouldn't do that as well. So we are going to jump to our website here. And if you'll bear with us just a few minutes, I want to make sure that everybody's familiar with where our group page is. If everybody has ever gone to messerfinancial.com, which I'm sure you have, there's a quick link on the home page, and we're headed that way now. Would you go to the quick link instead of going that way, please? There you go. So there's a quick link which will take you to the group page, and then here you've got information, whether it's plan information on health insurance, a little bit more if you want to just read up on that, and you can better explain to an employer what you're bringing to them, all the way to disability, dental, vision, life. But the most important thing that I want you to see about this page right here is we've got the tools that you need. So you can download group documents here, and if you would, I'm going to kind of let Courtney just guide us through this.
Okay, so on the group documents page, if you click on that link, we have a list of requirements. We've already gone over that, but it's there for your reference on our website also. We also have the censuses, and we have them set up by group size, so you can pick the one that is best for you.
And would you open the quoting requirements? I just want to see that if we could. So there you go. It makes it very easy for you. If you're out in the field and you're quoting a 2 to 50, what do I need? There it is. Obviously, I've already told you about it today, but you can just tuck this away and you'll know what you're looking for. And if we go back, just pull up the 25-man census if you would, and that's the same census that Courtney covered just a few minutes ago with you.
It opens up differently.
So again, it's the same census that we just covered a few minutes ago. So if you need a 25-man census, if you need a 100-man census, whatever you need, they're all right there. And then lastly, we've got our group contract on here as well. And if you haven't already done a group contract, I would recommend that you do. This just ties you to the client that you bring in-house, making sure that we can compensate you for that. So if you've ever got any questions on the contract, reach out to me by email or phone. We'll discuss if you've got any issues with it at all. But it's pretty lean and pretty easy to follow. We've been using the same group contract since about 2005. The last thing I want to show, if we could, is maybe just some of the group customer service. If you're speaking with a client, there you go there. Then we can go to the next screen. It just kind of gives you some bullet points on, hey, if you're out speaking with a client and they say, well, what can you do for me? Well, here they are. And again, this all falls back to Courtney and her team. So with that, that's actually going to conclude today's program, unless there are any questions that we can address. Again, I appreciate everybody attending, and we will have this recorded in case someone needs to listen to it again. Are there any questions over there, Courtney?
No, no questions.
Okay, very good. Then I would like to thank everyone, and we enjoyed, and I look forward to doing business with you going forward. Thanks.